Hi traders, Shawn Lucas here, head trader at the Apiary Fund. So good to be with you today. Always look forward to these opportunities to chat with you a little bit about trading. It's one of my favorite topics, and I hope in some small way we're able to share a little bit of information, a little insight that might help you in your own trading careers. I love to trade. It is just one of the greatest. Really one of the greatest opportunities for income and creating wealth, that this life has to offer. So anything we can do here to help you through that process, that's what we're all about. So at any rate, we're going to talk about price patterns today, and in particular, what I'd like to do is share my three favorite price patterns with you. Why I like them, I'll share why I like them, and hopefully kind of get into how I use them. And maybe the markets will coordinate with this and cooperate. It's the middle of the day, so I don't always think that this is the best time to do the YouTube lives, but it seems to work pretty well with our schedule if the markets will cooperate with us. Just a little stroll down memory lane. I was looking at 1 year ago today. We did a YouTube or a Facebook Live. It was Facebook at the time from California, and there were these massive waves rolling in, and these wake surfers in the back. They were skim surfing, I think. And it was the coolest thing, but I looked at the technology we were using, and it was awful. I think if I remember right, the Facebook was crooked or upside or sideways or something like that. And we've since hired some professionals who know what they're doing and brought them in, and we're so glad that they're with us because it's really helped us do a better job with these live presentations. So thanks to all you guys in the back there. You guys are awesome. Keith, Cade, all of you. Thank you. Any rate, we're excited also because yesterday I spent the entire day wandering around some property in the mountains and recording a little bit about our wobble technique. And so we're going to be putting a little bit of presentation together on that. We'll probably distribute that through the Trader on the Street, under the Trader on the Street umbrella. So we'll let you know when that comes out, and hopefully that'll be something that'll also help you in your trading. And then, of course, we're always looking forward to, we've got our Beeline boot camp to help folks get through those Beeline requirements. And, we'll all come together under the same roof. We'll all just be working on all of those Beeline requirements together. We have a really great staff on hand to help with questions and get you through all those tough requirements. And then following that, the following week, of course, we're going to be doing a trading cruise, and I'm so looking forward to that cruise. We're living the life of a trader. So on that cruise, we're going to get up early, we're going to place a few trades, and hopefully make a little bit of money at that, and then just kind of enjoy our life out in the Caribbean. So anyway, that's coming up, and we're super excited for that. But let's just dive right in, and let's dive in. I want to talk a little bit about chart patterns, and in particular, my three favorite. And if I did not start out with this pattern, I think everybody would just like shout and scream, Shawn, that is not your favorite pattern. But my favorite pattern is what I call a consolidation breakout. So I've got to start with the consolidation breakout strategy. Or chart pattern. And basically what it is you've got a sideways consolidation in the market. You've got really solid resistance levels up on top and really strong support levels on bottom, and the market just kind of goes back and forth in between in a sideways consolidation pattern. So the way I look at that is I take a measure bar a measure bar up at the top. And I look for the market to move sideways within the highs and the lows of that consolidation or that measure bar. So in this case, we have 1, 2, 3, 4 bars of consolidation. Now, what I look for in a setup like this, a pattern like this, is I'm just looking for the market to break higher or to break lower. I don't really care which direction the market moves. That's not important to me. But what's important to me is that when I see this pattern start to form on the charts, that I'm ready for a move, be it to the upside or be it to the downside. So that's the first pattern that I love. It's I call it a consolidation and those of you consolidation breakout. Those of you who are at the Apiary Fund, you'll see me trade that all the time. You'll hear me reference it all the time. It's just it's just a really simple trade to identify because you've got, you can see the market just going sideways, and furthermore, it's a really simple pattern to trade because you have a really defined resistance level up at the top, a really well-defined resistance level up at the top, and a really well-defined support level at the bottom. And so you can catch that trade as it breaks those levels. So as it breaks out of that resistance or out of that support, you just hop onto that freight train and you ride it until you make a few pips off of that trade. So that's the first one. Second one is kind of the follow-up to that. It's just a simple reversal pattern. And a reversal pattern, you basically have an established trend coming into the reversal. Then you have an apex, basically the lowest low. You don't know that's an apex until the market starts to turn away from that. But then you have your reversal bar. So this is a reversal, 3-bar reversal. Now I love the 3-bar reversal, especially as we get one price cycle away from. So I look for that market to form one price cycle away from its last apex. So up here, that's its last apex. If that market moves a full price cycle away from its previous apex, then I look for this 3-bar reversal to form. And again, this is a fairly simple trade pattern or chart pattern to trade because you have the high of your apex. This is your apex. The high of your apex is a great entry or a trigger into the counter trend move into that market as it moves higher. So the 3-bar reversal, again, just a real classic trade setup. But the key to making this work really well is identifying a price cycle away from your last pivot. So your pivot high or your pivot low. One price cycle move away from that, then I start to look for that 3-bar reversal. Anytime that market, I can adjust this. So if this market keeps going lower, I can keep adjusting my trigger point, my entry level lower and lower. If this market continues moving lower, I just follow that down, and as soon as it makes that turn, it puts me into the trade, and I can make a little bit of money on that. So that's pattern number 2. There you go. Pattern number 3, it happens after this. So what I like to see here, let's go back to the consolidation breakout. You've got your consolidation form. You got your really defined trigger points for your entry into a long and really well-defined entry points for the short. Let's get rid of that. And what happens is the market breaks out. So what I look for on this pattern is the first retracement of the breakout. So as that market pulls back here, so we're seeing it pull back, then I'm looking for another reversal to form. So what I'll start to do is I'll fade into this trade, coming all the way back into that retracement. Because what I find is fairly common is as the market's breaking out, like you see in this little diagram here, as it's starting to break out, what you see oftentimes is it pauses, right? And then all the sellers or all the buyers, the opposite side of the trade, they all pile in thinking, oh, this is overdone. It's moved too far. And so they pile in and push the market counter to the direction of the breakout. So in this case, they're pushing it lower. And as they push it lower, they realize that, hey, there's still buyers in this market. You know, they've only had two days or 2 bars of glory, if you will. They've only had 2 bars of glory to show how strong they are. And now all these sellers are trying to push them back down. Well, those buyers step back in and they show the sellers what to do. And then we take an entry. So I'll fade that, pick up some of these. And then my target on that trade is somewhere near the previous high. So I like to join those, in this case, the buyers, as they're jumping back into the market and pushing that market a little bit higher. So there you go, consolidations, reversals, and the first retracement of the reversal. Those are my 3 favorite. You know what? Let's throw another one in there. Actually, let's do one more real quick, because this is one of my favorites as well. And I guess I have a lot of favorites. Do you guys have a lot of favorites? Why don't you take a second and type in your favorites your favorite chart pattern in the chat box there, and I'll kind of take a look at that while I explain this. Tell me what your favorite is. This is what I call either what's called either an ascending or a descending triangle. This is another one of my favorites. And so the way this works is you've got a pivot followed by a higher pivot, followed by a higher pivot. So in this case, this is an ascending triangle. So what defines this is the triangle. So you've got this resistance level that's pretty well defined by that bar, that bar. You know, maybe you have a couple of wicks that are up here. So, but what you start to see in the market is this really well defined resistance layer, and it's fairly level. It's not, you know, it doesn't have much of an angle to it. It's just fairly flat. But then you've got these support levels, or these pivot lows, that are getting higher. So you've got higher and higher pivot lows coming into a very strong resistance level. And then, of course, what I like to see is the breakout of that level. So I like to see that market break in that direction. Of course, the opposite is true on the downside, called a descending triangle, where you have lower and lower pivot highs with a very strong support level. But again, what I love about these, and in particular, you know, this consolidation breakout and this ascending triangle, whenever I see those, that usually sets up, you know, any time I see either of those chart patterns form, that usually sets up this first retracement of the breakout. So anytime I can get that, you know, chart pattern after chart pattern after chart pattern, that's just euphoria, right? Love that, because what that does is it just sets up, it almost feels like you're in tune with the market, right? You're in sync with it, because you've got a really good handle on the initial breakout. That initial breakout you make some money on. and then the market retraces, and you make some more money on the retracement of that, and then it moves higher, and you see you're just really riding every wave of that market that you can. So those are the three different, or four, excuse me. I said three, but I gave you four. See, a bonus. Those are just a couple of my favorite chart patterns that you'll see me trade all the time. Let's see if we can find some examples in real markets. So we ought to be able to find some decent, okay, here's a, so here we see a pretty well-defined consolidation, right? You see that consolidation right in there, measured by that. Let me zoom in real tight. There we go. So let me draw that a little bit better here. So you got this really well-defined consolidation. So there's the consolidation, right? Then you have the breakout. Market breaks out. And then you have the retracement. Boom. So in this particular case, what you've got is you've got an opportunity to trade both the breakout right there on that circle, and then the retracement in that circle. So 1, 2, that's a 1-2 punch chart pattern setup. You got the consolidation, you got the breakout, the market pulls back and you get into the retracement and then ride that up to the top here. Pretty cool, huh? Let me take a look at some of your comments here. Higher time frame. Oh yeah, conservative says higher time frames, generally speaking, provide more powerful setups. Yeah, that's a good observation. These patterns, you'll see these patterns on low time frames, high time frames. It really doesn't matter, but regardless, you know, taking advantage of them is really what we're trying to do. And this one was fast. You know, you would have been able to pick up 1-2 trades if you're day trading that. All right, let's see. Here's a 3-bar reversal pattern right here. Well, not exactly, not technically a 3-bar reversal. Let's zoom in again. It's kind of hard to see, I think, on this. So this is kind of an offshoot of the 3-bar reversal pattern. You've got your apex right here. So the high of that bar and the low of that bar. And this takes, you know, a couple of 1, 2, 3 bars to actually break the apex bar. But then you have the breakout, then you have the retracement, and then the run. So again, another 1-2 punch where you catch the breakout, and then you catch the retracement and ride that again. Bridget, I'm in gold 2. Can I get a way to hook up Alveo to MT4 so I can trade Apiary accounts on Market Traders Institute charts? Yeah, so Alveo, just so those of you, we've got a lot of, in this environment, we have a lot of Apiary Fund people and we have a lot of non-Apiary Fund people in this venue. For those of you who aren't with Apiary, Alveo is kind of our proprietary trading platform, and we built it to accommodate the management of the Apiary Fund. So the Apiary Fund is just this pool of family, it's a pool of family money, right? You're basically trading the Lucas family money when you come in and trade with the Apiary Fund. So that pool of money has to be managed a certain way because we're letting, you know, the masses out there have an opportunity to trade that fund. So there wasn't software built that would allow us, there wasn't a out-of-the-box software solution that would allow us to manage that fund properly with all the risk and everything. And so we basically built our own platform called the Alveo platform. And we use that for all of our internal trading. So the question is there any way of hooking it between the two? I know that we have several, inside the Apiary Fund, we have several developers who are working on ways of integrating Alveo with outside, but that's work that they're doing on their own. So Apiary Fund itself doesn't have a way of connecting our platform to other platforms, or vice versa, you know, without doing some technical development on your own. So hopefully, that's probably not the news you wanted to hear, but that's kind of the way it is. So there you go, Bridget. You can do all your apiary stuff inside Apiary, but you'll probably need a second platform to do anything on your own in the retail space. So, all right. Yeah, Sandra, we are definitely working on a mobile version. Yeah, we would really, really, really love to have that mobile version. In fact, I've got a meeting on Thursday. Right after our trading room, I have a meeting with our development company that we're working with who's helping us develop that mobile version. We're behind schedule on that. I had hoped to have had that out by our last summit, but that's the way life works, isn't it? You're always over budget and over in time. That's life. Let's get back to these questions. Let's see if we can find an ascending or a descending triangle real quick. Kind of show you that. So we've got a consolidation breakout. We've got the framework for a 3-bar reversal. That didn't quite work out to be a 3-bar. It was a 1, 2, 3, 4-bar. But the same concept where you're entering the market on the apex, the high of the apex here. Let's see if we've got an ascending or a descending triangle that we could take a look at. Let's see what market's doing right now. See if we've got anything developing right now. Nothing really there. Another note on the platform, just for those of you who are interested, gee whiz type stuff. Here we go. This is kind of a little bit of a descending triangle right here. So typically, with a real solid descending triangle, what I'd like to see is the market moving, trending that direction, where in this case it's moving this way. But the concept is kind of the same, where you see these highs are getting lower. You can kind of see that as I draw the lines in, but your base is all getting low, is all staying the same. And then you have your breakout, the retracement, and then another breakout, or another movement in that direction. So again, this would be a lot better of a setup if this was an ascending triangle and moving in the direction of the trend, which is what I prefer to see. Let's see if we can get a good ascending triangle pattern. I know I've traded some of those in recent trading sessions, so I'm surprised I'm not able to find anything. Okay, here's a little bit of an ascending triangle, but didn't really follow through. It broke out, but not a lot of follow through on it. But you can see pivot low, pivot low, pivot low, break. This one didn't have that retracement. But And just not seeing any really good examples of that ascending triangle. At any rate, those are three of my favorite chart patterns. I think we'll try and wrap it up here. Try not to go too long, take too much of your day today. At any rate, so let's just review real quick. Three chart patterns, my three favorite, and I love the 1-2 punch that I get out of these chart patterns. The first is the consolidation breakout. So it's defined by a real sideways movement in the market, where all of your price action is contained within one measure bar. So you've got the market doesn't break above the high of the measure bar, or it doesn't break below the low of the measure bar, and it just moves sideways, right? And what I'm looking for on this pattern is I'm looking for the market to break the sideways consolidation, either to the upside or to the downside. Anytime I see a consolidation like that, I am all over it. I'm just like starting to salivate, really loving the future opportunities. Once that market breaks, that leads up to the second of my favorite trades. So it's the first retracement of the breakout right here. So the market breaks like what we see here. It breaks and then retraces. And what I like to do is I like to fade into the retracement there. So basically I'm trying to catch the second up leg. I'm trying to capture the movement of the second leg in the direction of the break. So I made money on the break over here, right? Made money on that break, and then the market pauses and comes back, and then I'm trying to make more money on a continuation in the direction of the break. The same thing happens. I'm looking for a 3-bar reversals, and reversals I'm really looking for the market to move a full price cycle away from the last pivot. Again, this is an apiary. A price cycle is an apiary tool that we use to measure the distance of these legs in the market. So I'm looking for the market to move a full price cycle, and then I'm looking for that reversal pattern to form. Hopefully it's a 3-bar. In the example I showed you, it was more of a 4-bar. It took 4 bars to form that reversal. And anytime I get that break, again, I'm looking for the next leg, the 1-2 punch, right here, that first retracement. And the final is the ascending triangle or descending triangle, where the market is defined by a very strong resistance level, not moving any higher, not moving any lower, but just very defined resistance level and higher pivot lows coming into that reversal. Usually all these higher pivot lows are putting more and more pressure on that resistance layer, and eventually it breaks. You have the breakout. And again, it leads to the 1-2 punch, the retracement, first retracement of the breakout. So again, anytime I look at those patterns, I'm looking for that income from the initial trade setup, and then obviously that first retracement trade. Both of those are high probability. All of these are high probability setups, and hopefully you can use those in your trading. And if you want to watch me trade these live, I don't see them all the time, but when I do in the trading room on Thursday mornings, I'll be sure to mention them and say, hey, this is what we talked about yesterday, or something like that. So don't forget to join us. Those of you who are with Apiary, join us in the morning for the trading room when we do our live trading session. Great to be with you. Just want to wish all of you who are in Florida, hope that hope that this massive storm passes okay and everything is well for you. You're in our hearts and prayers. So, any rate, wish you the best of success in all your trading, and we'll keep you up to date. We'll keep doing these YouTube lives. Thanks for joining us, and be sure to subscribe to our YouTube channel so you get updates as to when we are doing these, and then of course comments. You know, we'll do our best to make sure we get in there and respond to any comments or questions that you have on each of these videos. So, thanks everybody. Happy trading. We'll see you next Wednesday.